Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today I want to talk a little bit about Didi and the regulatory struggles that they're having and the impact that has on their market share. I have talked about in some of my other videos about why this is a concern, and it's starting to materialize. I believe you're starting to see people write articles about it, so I wanted to talk about it a little bit more in depth, talk about who we know right now who's getting involved in the industry, what their current market share is, what that could deteriorate to, and just talk about some of the things that are happening right now in general with Didi. So stick around, let's go through it. Before we get started, I just want to remind you I do videos on personal finance, investing, and stock analysis. So if you like this type of content, please consider subscribing. Also hit that like button, it helps me out a lot with the algorithm. All right, so jumping right into it, as we've discussed before, Didi has about 90% of the current market of ride hailing inside of China. This is a huge amount of market share. They're a huge player in this industry. 90% of any market is just substantial. That's almost a total monopoly. That's huge. And opening the door, as I mentioned in other videos, is just not good. You want to keep that door shut as long as possible. Natural tendency is for people to move off of those platforms more than likely. But this is just giving way to more competition, lower prices, lower margins, all those things that are probably just not good for Didi from a competitive landscape. So the first thing I wanted to do is go over this Bloomberg Business Week article. They have some good information. So just for those who are unfamiliar with Didi, there's a pretty good revenue comparison here. 6.5 billion compared to Uber at 2.9 and Lyft. So just in sheer size, it's bigger than both Lyft and Uber in terms of total revenue. I think they have actual positive net income. There's some question on how true it is and all that good stuff. But point is their revenue is quite substantial and large, over 20 billion for the full year of 2020. That's exceptional. So definitely a very large business. The thing in here that I really, so again, rare opportunity to chip away. You basically, when you're going through here, second largest ever Chinese company to go public. When they told them to go, basically told them that they needed to take them off the App Store. Let's scroll down here a little bit further. Orders have fallen by about 30% since the announcement of the Pro. Didi's prices fluctuate with demand. He says he's been able to count on making about 1.5 the normal rate, even rush hour. That increase evaporated since the ban. Another sign of weak demand. So this is starting to tell you what are some of the issues. If you like the video thus far, please hit that like button. Thank you so much. With the ban, people are unable to sign up, both drivers and people who need a ride. So if there becomes a supply issue where there's not enough drivers, prices may go up. That's a bad thing, because what could happen is competitors can charge a cheaper price, and then they may go to the competitor's app. Myself personally, I'll look at Uber and Lyft, see who's cheaper, and go with whatever's cheaper. It's pretty easy to just use both. There's enough drivers on each. On the demand side, if people aren't able to sign up, they may not be, on the driver's side, if new drivers aren't able to sign up, existing drivers take off because they're not able to get as many rides, whatever it may be. And people aren't able to consistently get rides because there's less drivers, people may move off the app and start trying other apps just because they want to make sure that they get a ride. And this kind of it kind of opens up the door for a competitor here to take a very large percentage of Didi's dominance here in the game. I've talked about this before, but if this lasts a short amount of time, a month, we're going on maybe 2.5 weeks now. If this lasts a short period of time, over a month, maybe 3 months, is still a long time to give up way to competitors. Allows the supply and demand to get out of funk for Didi's ecosystem. So that would be really adverse to their business. And they have warned twice that this is most likely going to have impact to the revenue, and it makes sense because they are definitely losing market share to some of their competitors. Some of those competitors, the bigger one I believe is this Kakao and Didi Pinch, have spiked in Apple's China App Store, in some case more than doubling according to this report. E-commerce and delivery has also, I believe, says faces its own antitrust, but I believe this person as well, they reopened a standalone app. We'll look on that in a second. They opened up a standalone app that basically does ride hailing again. So there's some new entrants, there's some re-entrants, there's also people who are already in the game starting to make some moves here. Here, loyalty to Didi doesn't run deep among drivers who complain that pay has gotten worse as it consolidated its power. It's simple for us drivers. Whichever platform offers the most money, we go ahead and drive for that. And I have seen this definitely the case in the U.S. as well. Going around in New York, you'll see drivers with two phones. They already got a drive picked out by the time that they drop you off, and they're already on to the next one. And they got multiple apps open, trying to find out which is the best ride and who's going to offer the most money for the next ride. So as much as, from a loyalty standpoint, that is pretty fickle. And again, they're just opening it up for new users sign up, and the more users there are, the more drivers will move over to others. And those others typically use incentives to bring, new riders on as well as drivers. So this is definitely a concern. The longer this lasts, it's going to cause more problems for Didi. We just have to. We're going to need to see the impact, and it's going to take some time in order to see that hit revenue. I mean, this could take, from the time this gets put back on, it could take probably another 6 months to see the full impact of the revenue, and if it's going to be a lasting impact. If it lasts over a month, I'm more than likely leaning towards it's going to have a longer term impact to Didi's bottom line, which is a very concerning. It's very concerning. It's going to definitely get harder to have net income positive if you are, increasing competition, because the rate at which ride hailing is increasing, I don't think will be able to sustain in the short term how fast they're going to lose market share here if they're not going to be in the App Store within a month. You want to stave off that as long as possible. Hey, you're still here. Please hit that like button. Thanks so much. Now back to Didi. Moving over to another article by CNBC. They had the same thing. This company here, Miotone, they relaunched that standalone app. They're also under antitrust or some sort of probe, which seems to be a trend here in the PRC, People's Republic of China. Another rival, T3, plans to expand into 15 cities. So a lot of opportunity here for those in the other. If you invested in Didi, definitely concerning here for you, because you're getting people into new markets. It's just not good. The other thing is T3 looks to be pretty well backed by, financially. So they got Tencent and Alibaba as an investor. Interesting fact here is I believe Didi themselves was backed by Tencent and still is today, if I'm not wrong. So it's definitely interesting that they have a competitor with the same financial backer there. And then this other one, which I believe is a bigger competitor currently and more established in the market, this Kakao, they are lowering their prices. That is kind of what I was talking about, where they're trying to get prices lower. Drivers will probably have a better incentive to jump over there because tips may be higher. because people are paying lower fares. There could be new driver bonuses, so on and so forth. But this is a great opportunity for them, basically remove the biggest competitor in the room and see who fills the void. We talk about, just bring out Loki in the latest, in the Disney Plus series. When someone, goes away, someone fills the void, and who is going to fill that void here for Didi? That's why it's super, and not to use this word overly, is uber important that they get everything fixed as soon as possible so they can get back and reestablish themselves. This is a pretty concerning thing that's going on right now in terms of market share. We're going to want to monitor this over the next several weeks and months, or however long this lasts. At some point, it's going to change the financials of Didi completely if it continues, because if they continue to lose market share, it's going to be definitely have a very, very substantial impact on their revenue and their net income and all their other financials. So, and valuation, which is ultimately what we're concerned about with as stakeholders. So definitely something you want to pay attention to. This regulation in the PRC, People's Republic of China, on these apps is concerning. This one seems a little bit more concerning than some of the other things I've seen before. Instead of a fine, they are doing some stoppage of business almost, removing an app from the App Store for a business whose businesses ran out of the App Store is huge. We're going to want to monitor this moving forward. So hopefully you enjoyed today's video. If you like this type of content, please consider subscribing. Hit that like button. Let me know down in the comments what you think about Didi losing market share. Until next time, Frank Finance, out.